Hello, good afternoon. My name is John Sarson. I'm the CEO of Sarson Funds. We have a special fireside chat today with Michael Steuer. He is the CTO and president of the Casper Association. We're going to be talking about Casper network and Casper's blockchain on this fireside chat. This has been a project that we have known about and invested in for 5 years at Sarson Funds. But in the last 5 weeks, Casper has made incredible strides in achieving some of the goals that Michael has laid out for the team. They're really going to be punctuated by a major US listing coming up this week, which is very, very exciting for US-based investors because this has been a chain that has been difficult to buy as a US-based investor, as it is a layer one, so it does not trade on top of Ethereum or Solana. As a layer one, I ran into this project in Davos, Switzerland, about 5 years ago, when Ethereum 2.0 was just a concept. And all the different concepts that Ethereum 2.0 said they were going to put into their blockchain to make it better at doing things. Casper's blockchain already had these things. So Casper's been very successful in Europe, a little bit unknown in the United States, but that's changing rapidly with basically some of the developments that we'll talk about on this call and some of the core capabilities that the Casper blockchain offers that are so badly needed by the markets today. Michael, it's a pleasure to have you on with us. You've been in crypto for a long time, and you've been associated with the Casper blockchain for a very long time. How do you feel about your coming out party for US investors? Is it something that is exciting for you as it is for us?
Of course it is, John. First of all, thank you very much for inviting me here. I'm just really happy to be talking with you and obviously your network of US interested parties here. The US, obviously, especially over the last few years and under the current administration and the changes that we're seeing on the regulatory front, has been ramping up to become more and more relevant in the crypto and blockchain industry, where a lot of it has been sort of playing internationally over the last years, basically since inception. And I think we've seen a lot of great US projects that were founded here domicile overseas because the regulations in the United States just weren't there, right? Like we've just celebrated the 1 year anniversary of the Genius Act. For those who are paying attention, there's the Clarity Act, which is really about, as the name implies, market clarity. Has been pending in Congress. The House has already passed a version of it. It's currently in the Senate. Hopes and expectations are that it will pass before recess, and certainly the White House is behind it. So it's a very opportune time to be entering the United States market in sort of full force. Because finally, the US has basically set a goal for itself to become the headquarters of the crypto world, and it hasn't been able to play in that massive sandbox for all these years. So, yes, we're very excited about what's about to happen here.
We are too. So, when we first invested in Casper Network 5 years ago, we liked the fact that it was a business-oriented blockchain with a focus on having a development team to help businesses implement blockchain technology. And many of those businesses at the time, they only knew blockchain technology insofar as IBM provided it through Hyperledger. So for some of you on the call, that'll maybe be kind of a name from the past. We don't talk too much about IBM and Hyperledger anymore. Instead, we're talking
or IBM in general.
Or IBM in general. That's right.
Yeah.
Instead we're talking about public validator networks, and that was always the strength for a business that was using Hyperledger to move onto a public blockchain for the permanence and the security and the transparency that a public blockchain offers. The Casper network has been running with 5 nines uptime for 5 years. It has a massive validator network, mostly in Europe, but we're happy to be part of the change in that. Sarson Funds announced last week we are running a Casper validator node You know, there's, we're the 50th largest with just a few 100,000 in our validators. So there's a lot of people that are running validator Casper or Casper validator nodes. So it's a very, very secure layer one protocol. But Michael, a question for you. For people that haven't been following Casper closely, what are the key network attributes that you think have created this longevity and attract people to the Casper network?
Yeah, thanks for that, John. So you touched on something interesting earlier in your question, which is when Casper got started and we founded the project in 2018. We looked around sort of the nascent or emerging blockchain industry, and what we saw was a few things. First of all, for those of you who are somewhat blockchain familiar or curious, you probably have heard of concepts like proof of work and proof of stake as consensus mechanisms, which is the way that blockchains reach consensus. Really, the power of blockchain is that you can essentially cryptographically prove that everything that the blockchain says is true, and there's no way of changing it and denying it. The entire world was still running off proof of work, including Ethereum, which at the time and still is one of the largest smart contract blockchains out there. And proof of work is what runs Bitcoin. And for those of you following that, you know that it requires tons and tons of energy, right? Like right now, it's competing for data centers and energy and electrical power with AI data centers, for example. And that's why there's such a shortage of compute and energy in the market. So it's highly inefficient. And Ethereum recognized that. They started an internal research project all the way back in 2015 to basically transition their network from proof of work to proof of stake, which is instead of based on cryptographic work that node operators need to perform. It's based on economic game theory, essentially, to keep the network secure. In Ethereum, they basically developed the predecessor to our protocol, and they named it Casper. It was really the Casper research that they started within the Ethereum Foundation. When we looked at it in 2018, we noticed that the pace at which the Ethereum Foundation was innovating and getting ready to launch this looked like it would take another 5 years or so before proof of stake would really see the light on Ethereum. And it turned out that was more or less accurate, because they launched what they called the merge in somewhere around 2022, 2023. So
Ethereum 2.0, as it's colloquially referred to as.
That's right. And we believed that there was going to be too long. The market couldn't bear staying on proof of work for that long. And it's also really not great for the planet and a whole host of other things. Additionally, looking around the industry at the time, there seemed to be a lot of projects and blockchains focused on sort of get-rich-quick schemes, fads that would come and go. In 2018 in particular was the whole ICO boom and bust, right? Like people launching tokens, raking in millions, hundreds of millions or more, and then months or a year later, it'd be gone. But there were very few projects focused on really tailoring a product to business needs. We, as an industry, for the longest time, have been talking about blockchain is going to be is the future, right? Like there is going to be a lot of innovation and changes that happen even on a society level based on decentralized ledger technology. But nobody was really tackling the needs of real enterprises, of real institutions. And those are very different from the get-rich-quick schemes that we saw in the industry at the time, right? Like as a company, you need to have a number of things that traditional blockchains at the time couldn't provide. One of which is something that we've had from the get-go, instant finality, right? When you send a transaction as an institution, as a fund, and you do this all the time, John. And it's a very valuable asset that you're sending, millions, hundreds of millions, or billions. You want to know that when you send it, it's no longer yours and it now belongs to the recipient, right? In Ethereum and many other networks, you have this concept of waiting for confirmations on the network, right? Like if your viewers here have sent funds to an exchange, right, like a Coinbase, a Kraken, they are familiar with the concept where it says, well, we have noticed your transaction, but now please wait 10, 15 minutes until we have 64 confirmations that it really is on the blockchain and doesn't get reverted. That works maybe for consumers. It certainly doesn't work when you, as a fund, send $100 million worth of assets to another fund, right? Who's legally
right.
Who's legally responsible during that sort of limbo period when
Yeah, or when we're doing a DeFi transaction where, we are doing the buys and sells in the same block. We need instant finality, or else
you
those
need instant
transactions
finality?
cannot be designed.
Absolutely, both from an economic perspective as well as from a legal and regulatory perspective. What if you send an asset and during that 10, 15-minute window, some sort of black swan event happens? Are you on the hook or is the eventual recipient on the hook?
Yeah.
So that's,
And we'll talk about this when we talk more in a minute about RWAs, because
Mhm.
RWAs are going to be very much handicapped on working on any chain without single block finality. And most chains do not have single block finality.
Correct.
Algorand's entire claim to fame is that it has single block finality and quantum resistance, both of which Casper's had for quite a while. So
Yes,
we'll talk more about
longer than
that.
Algorand.
Yes, that's right.
Um, And as similar examples, John, are if you run a company, which you do, you have, as the CEO, you have certain access to funds, to data, to decision-making power. But your intern probably has very different access. They can't empty your bank accounts. In traditional blockchains, there's only one level of access. There's no permissions, there's no roles, there's no nothing. So we designed a blockchain where you can actually mirror your corporate governance on chain. And make sure that the CFO and the janitor don't have the same level of access to data and permissions. Again, very important from a corporate and enterprise perspective.
Now, I know in the early days you were working with Fabric, Hyperledger Fabric, and I actually saw my first ever atomic swap when I was in Davos, when he did an atomic
Yeah.
swap from Hyperledger Fabric over to the Casper blockchain. Was it a desire to mirror the same ability to control permissions that IBM was offering to business clients that got you in the mindset to offer that on Casper blockchain? It seems like a lot of blockchains never really have given much thought to the
It,
business needs for that.
It was not so much sort of IBM as it was really our survey of what businesses and enterprises need, and permissions is basic, right? That's like you onboard a new employee, the first thing you do is set up their email account and decide what they have access to. That just didn't exist. And like that, I mean, we can go on forever, but there is here's another good example. If you are, so blockchains work with smart contracts, right? Again, I'm explaining this for the audience. And a smart contract is essentially an app that runs on top of your blockchain, and that basically contains all the rules and logic of your application. Now, in real life, applications, I mean, if you download an app from an app store, you know that you get regular updates on sometimes on a daily basis. If you run a financial application, you know that you have to adjust it to changing regulations, which happens all the time, or you enter a new jurisdiction, which the US has 50 states with basically 50 different regulatory regimes, and they change all the time. Blockchains are known to be immutable, which is part of like the power of blockchain, but it's also a handicap when you talk about applications built on top of a blockchain. They need to be able to be upgraded. no other blockchain traditionally has had upgradable smart contracts. There are certainly a number of workarounds that have been implemented in other ecosystems once sort of people realize that, hey, this immutability is great, but it doesn't work for businesses. But those workarounds have proven to introduce a lot of risk. And many of the hacks over the years that people read about in the news can be traced back to actually exactly these workarounds to make smart contracts or apps on blockchains immutable. So something that we've solved from the get-go, as well as a whole host of other things that I'm sure you'll bring up as we continue this conversation.
Well, so it is when we originally invested, it was all about the business applications. So many blockchains were retail and consumer facing, but there was such a huge unmet demand in the business services component of blockchain. Probably the biggest player and the player that is the most similar to Casper is Hedera. Hedera has been available in the United States, and Casper has not. It's been a real handicap for Casper. I know Casper has built a fabulous reputation for itself in Europe and Switzerland and in India, other places where you've had a lot of adoption. Can you kind of talk a little bit more about your Swiss roots and has it been more of a handicap, or is it something that you point to proudly as a feature of the chain?
Well, both. I mean, obviously, U.S. access is important, and I think we can break the news here on this call. I mean, you mentioned a large U.S. Tier 1 exchange. We're actually listing on Kraken tomorrow. So that's breaking news, and Kraken, as you know, is one of considered one of the top three exchanges in the world. So it's a big deal generally globally, but it's certainly a big deal for U.S. access as well, as it is one of the major U.S. players. So the reason why we domiciled in Switzerland as the Casper Association is simply because the regulatory regime in the United States did not exist, right? Like if you go back to the 5-6 years ago, very few, if any, blockchain projects basically domiciled in the United States, because it would mean getting Wells notices from the SEC and being called into regulators and potentially running actual legal risk. So it just was not a possibility. Switzerland, on the other hand, as sort of the financial center of Europe, has been on the forefront of sort of regulatory innovation. FINMA, which is their equivalent of the SEC, has very clear regulatory framework that we have really tightly collaborated with them on, and made sure that we are in perfect alignment and compliance. And as such, we have tremendous experience in running a regulatory compliant blockchain that basically that's going to benefit us as we're entering the United States, because we've done this before, and gives us a leg up on some who have not operated in a regulatory regime until now, because there hasn't been one in many jurisdictions.
That makes sense. Any Swiss banking connections that could potentially offer advantage over U.S. banking connections in the future? Is that
well, much like the regulators, the Swiss banks too have been obviously they're a few years ahead of the curve compared to United States banks. Which has been an opportunity for us to work with them closely and learn from each other and trial things that we're going to start seeing happening in the United States now as well. As I'm talking about like FINMA regulations in Switzerland, obviously the banks are stakeholders in that as well. So having been part of like the Swiss financial system, whether it's from a regulatory perspective or a banking perspective, has put us a bit ahead of the curve with regards to compared to our peers who've been trying to make sense of how to operate in the United States.
I'm excited for that. I think that's a feature I wanted to make sure you spoke on. Thank you. So at Sarson Funds, we're investors. We may use blockchains in a bona fide user way occasionally, but mostly we speculate on token prices. We work with a lot of family offices, and we see a lot of family offices looking to expand their overall crypto portfolios, but they want to find projects that still have some announcements that they'll make in the future, and an expanding ownership base so that they can make a return on their speculative investments. Um, Historically, we have not been able to purchase Casper token as a US based investor without opening up, say, a Binance account or an account that's typically very tricky to open as a US investor. Now, Kraken's a huge, big deal because it's going to allow investors that are looking to allocate to tokens that have, an emerging story and that are newly available and that are seeing an expanded investor base. They'll be able to buy Casper token easily through Kraken. We mentioned earlier in the call that Sarson Funds is running a US-based validator node. Talk to me about what to do with Casper tokens if we wanted to hold them as buy them long, to speculate that as the Casper blockchain becomes more heavily owned in the United States among US crypto investors. What do we do? Do we leave them on the exchange? Is there a staking opportunity?
Sure. So going back to what we talked about just a few minutes ago, Casper is a proof of stake protocol, meaning in order to secure the network, participants stake their tokens on the network, which means essentially providing security and being rewarded for it. So you as a Casper holder, the best thing you can do is to stake your tokens on the network, and you will get somewhere between like 10 and 12% APY essentially on your tokens as long as they're staked. The easiest way to do that is to some exchanges offer it through the exchange, but the easiest way is to self-custody or use a custody provider like a BitGo or some of the sort of larger, well-known custody providers. But that's the sort of advised way of like making sure you maximize your long-term value, because you're not just holding on to the tokens for appreciation, but you're also actually growing your holdings by staking them.
Yeah, and that is not a taxable event in the United States. Staking assets does not create a taxable event, nor does unstaking them. The income you receive as staking income is taxable. At Sarson Funds, we do help family offices that need a little bit of extra handholding when it comes to moving off of the major exchange to a self-custodied wallet in order to do something like staking. Staking is going to be available through a Sarson Funds validator, which we'd love for you to use. It's also going to be available through the TIE, which if you're a family office or institution looking for great institutional research on crypto projects, you should check out the tie.io. They're basically the Bloomberg for crypto.
And you're sharing more breaking news here, John. It's more U.S. institutions coming on the Casper
chain.
Right,
U.S. institutions are coming on, and the reason they're coming on is because there are two major themes that institutions and investors, or institutional investors, are looking for right now. Maybe three. They are looking for blockchains that are capable of agentic commerce, agent-to-agent commerce. Number one, they are looking for blockchains that have the single block finality necessary to accommodate this massive movement towards tokenizing everything. We call this real world asset tokenization, or RWA tokenization. There are perhaps 5 million financial instruments that will be tokenized in the next few years. And they're going to be tokenized this summer, starting with 1940 Act products through the Canton Network and DTCC and Broadridge Financial. And then we're going to be moving on to more esoteric or unique assets, maybe say like shared ownership in a condo complex, where like historically as an investor, you have very, very poor liquidity because there's no secondary market. By tokenizing those assets, bringing them on to an RWA platform, all of a sudden you can have buyers and sellers and a very healthy market without going through the process of becoming like a U.S. security. And so tokenization has a lot of promises. RWAs are very exciting for Wall Street. Wall Street's 100% committed. They see it as a better, faster, cheaper way to do business. So looking for blockchains that can accommodate this massive influx of real world assets that need to be tokenized is the second thing that institutional investors have identified as a theme. And then the last theme is quantum security in blockchains. So I bring all three of those up. All three of those are directly addressed in Casper's manifest roadmap that it's called. And I believe 2 out of 3 of them are complete, and the quantum security is out of, or it's on testnet basically. Would you like to elaborate on any of those differentiators for why Casper is having renewed interest from large investors?
No, I mean, I think you're spot on. Like, if I look at the adoption of blockchain technology over not just the next year or so, but the next decades, I think it's driven by exactly those forces. I think let's do one first. So, quantum, I think, is a must-have, not a nice-to-have. If you are tokenizing assets, or you're deciding to put part of your business on blockchain, and you have a horizon that spans beyond a couple years, you're going to want to have that question answered right now. Like, what happens when Q day, as it's being referred to, is here, which the experts in the field, like Google, put out a report last month or the month before, saying like, we originally thought it was going to be in the early 2030s. Now it looks like it might be the late 2020s. What happens when quantum security is a must-have? You have to have an underlying technology that can handle it, and Casper from day one was designed to essentially plug and play different cryptography algorithms onto it. So we essentially foresaw the need for the ability to add or augment the cryptography algorithms that we support, and quantum safe algorithms is basically just a plug and play thing for us. So that's coming in order to be able to answer that question, so that you, as if you are a CISO of an enterprise choosing a blockchain for a project with a 10-year horizon, you know that your assets are going to be safe for perpetuity, really. Then the other 2 things, as you mentioned, agentic commerce and RWAs. So I'll tackle agentic first. Companies like reports have been put out saying that the majority of the internet traffic that is currently flowing over the internet is no longer human. I think it was Cloudflare who a couple of weeks ago said that close to 60% of the traffic that they process is agentic. So just think about that. Like, we as a species have invented the internet, but now we are a minority on the internet. And that is from a traffic perspective. From a commerce perspective, right? Like, what do we use the internet for? Well, we mostly consume services and pay for them. From a commerce perspective, agents aren't there yet, right? Like, they consume most of the traffic, but they are unable to really effectively transact. They're not going to go on Amazon and put in a credit card and take out a subscription to Amazon Prime and renew it every year and deal with that, because that's designed for humans, right? Like, that's not something that your bot will do. They need something. They need something else. So what is that something else? That something else is X402. It's a new technology, a new protocol that essentially is purpose-built for agentic commerce on chain. So if your agent hits a website, instead of like taking out its credit card, it will request something from that website, whether it's a product, a service, or just a page, right? If it's for premium access to something. And that website will be able to tell the agent, like, hey, this is premium content, we need a payment from you. And then via this X402 protocol, the agent is able to pay for it. And immediately, in the same sort of atomic sort of action, it gets access to that resource that it requested. So this was a new technology that was originally put forward by Coinbase and Circle, the makers of USDC. but has since been spun out into the X402 Foundation, which sits under the Linux Foundation, which is the largest open source initiative in the industry. And Casper is one of 40 sort of co-founding members of the X402 Foundation, alongside names like Coinbase and Google and MasterCard and Visa and Amazon Web Services and the like. So we are pushing that technology forward. We are one of only about a handful or so of protocols that have fully integrated X402 right now and are part of the official deployment under the X402 Foundation. And then with Casper as this blockchain that is designed for business use cases, we've always had some of these things that I described where you can have permissions and sort of smarter accounts than just straight up access for anybody who has access to a key. So if you give your agent this capability to transact, you as a human, now in the minority, will want to give your agents some restrictions, right? Like you want to tell, hey, you can have access to these funds, but only until the end of the week, and only at a rate of like $100 a day, and you can only spend it on Amazon, on this one website. So to be able to give your agent those restrictions, you need to have a blockchain that can enforce those restrictions, and that's something that we offer. So we see definitely agentic commerce. It's already proven by sort of the traffic that we're seeing on the internet that agents are taking over. We see it as one of the drivers for blockchain adoption as well, and we're right there in the mix of pushing that forward. The other side that you mentioned is RWAs, right? Real world assets. It's essentially the confluence of traditional finance with decentralized finance. And that's been happening for a number of years now, but I think it's rapidly accelerating over the last year or so with all the regulation changes that we're seeing in the United States, with the Genius Act passing, with institutions finally coming on board with both NASDAQ and NYSE saying that they're going to on-chain trading, which also is not just faster and cheaper, it also enables them to essentially have 24/7 venues, right? Even though I think they announced that they were going to go with 24/6. I think they're still like their Sundays off or something. But there too, we've been on the forefront of innovation. There is a tokenization standard that's called ERC 3643. Sounds very technical, but basically what it is the ability to tokenize assets in a compliant way. And compliant means having to deal like up to this point, like you could do whatever you wanted on chain, right? Like that's why it's been sort of the Wild West and everybody does whatever they want. You want to deal with real world assets. Security is still security. You're still subject to the same laws. So you still need to be able to restrict who holds the security, who can transfer the security. You still have to restrict jurisdictions that can participate in your security and things like that. So in order to compliantly do real world assets on chain, you need to have a technology that enables basically the adherence to security laws and other regulations. And that is what ERC 3643 does. Casper is the first non-EVM chain to support it. So EVM is the Ethereum technology essentially. And we've also become a launch partner of the T-Rex ledger, which is currently actually put forward by Apex Partners, one of the largest financial technology providers in the world, that sees the flow of, I think, certainly hundreds of billions, if not trillions of assets. And when that launches later this year, Apex has already committed to putting over $100 billion of assets through the T-Rex ledger by early 2027. So we're excited about that as well, and being a part of really driving innovation in that space.
Oh, that's hugely important. I'm glad you spent a minute on that. So we've been watching RWAs, or the tokenization of real world assets, for the last 5 years. And it's been very uncertain as to how the industry was going to kind of develop. It's way less uncertain now. The major banks, the UBS, JP Morgan, Bank of New York Mellon, Broadridge, DTCC, Wells Fargo, all the major banks have built something called the Canton Network, which they're the only validators in, and that gives them the ability to roll back transactions. But they're only interested in traditional assets. all of the non-traditional assets, the ones that stand to benefit the most from tokenization, are going to continue to go to chains that specialize in meeting their needs where they are, and those chains are going to have to become compatible with the rules set up by the major banks for those assets to ever make their way to someone's Schwab account. And with the 3643 protocol, that's exactly what you're going to be able to do. You're going to be able to make sure that your rules are compatible with Canton. I know I brought up the TIE earlier. The TIE is a super validator for Canton. The type of connectivity that Canton wants is to independent blockchains that standardize their processes and their compliance so that they can start listing things that are tokenized on other chains on the Canton network and show up in your Schwab account. So that's really important. So I wanted to ask a little bit about the last couple of years. I know there's been some heads down building going on. Now, a few years ago, Hedera and Casper, Hedera being the only real business-oriented blockchain that I can think of besides Casper, about the same market cap. Hedera grew its market cap to $6 or $10 billion. Casper's been building. Now you're having a coming out party with these new capabilities in the United States. Can we call it Casper 2.0? Is that going to be, are you going to allow us to do that?
Well, we officially launched Casper 2.0, in the recent past, but I'm happy with you repurposing the label because it is a coming out party, and we feel like we're on the precipice of a new phase for the project with everything that's happening. So let's go with that.
Candidly, you're ahead of Hedera when it comes to three important categories, and that is agentic commerce, which is very important to us at Sarson Funds. RWA interoperability. RWAs that aren't interoperable are terrible. This is where we've been for the last 5 years, which is why RWAs have not delivered on their promise of improved secondary market liquidity.
Yeah.
And then the quantum security. I know that Casper has been working with a company called American Fortress to do quantum secure wallets for a long time. In fact, you might even say that Casper co-developed this quantum secure wallet with American Fortress. It used to be called Swiss Fortress, and before that, Matterfi. There'll be announcements coming out around that, and I believe Casper and Zero G are the two leading, the two first wallets that are going to have this quantum security, which is going to be amazing. What's your vision for what's going to resonate in the market as far as your capabilities? Is it the compatibility of your RWA platform? Is it the capabilities of your X402 micropayments and agentic commerce, or is it going to be your quantum security? Pioneering that. What do you think? Give me your crystal ball.
Do I have to pick just one, John? Can I say all three?
We both agree that quantum security is going to tell us when it's going to become the big deal.
Listen, quantum security, as I mentioned earlier, I believe is going to become table stakes, and a lot of projects are asleep at the wheel for it. Again, like I said, if you are looking to build something and your horizon exceeds the rest of this decade, which at this point we're towards the end of 2026, it really should. You need to know that whatever you're building is going to still exist once Q day arrives. So that has to be table stakes, and we first saw that coming back in 2018 when we decided to have pluggable cryptographic algorithms in the protocol. The other two, they're going to be in a race with each other. I continuously am astounded by what I see on the agentic front and how quickly that is really taking over human activity in our economy and on the internet. And there is just a lack of financial rails for agents still. There's a lot of initiatives that are taking place, but it's really, really early days. And we are just so blessed really to be part of the the few companies and initiatives that are working on putting those rails in place and sort of shaping that future. So that I think is a tremendous opportunity. As you mentioned, and you know this better than me, the confluence of TradFi and DeFi has been going on for many years, but it's really only very recently that it's become viable. And there too, it matters not just that you do it, but how you do it, right? Like, can you meet the needs of actual issuers? Can you put a product in place that enables liquidity between networks and banks and so on? Like you said, like you want to get your asset into your Schwab account. You need to be fully compliant because otherwise Schwab is on the hook. And B, all these things need to be able to talk to each other, right? So that's something that we're very heavily focused on and believe is going to be a major driver of things going forward.
Well, I'm very excited for what the future holds. At Sarson Funds, we are a research-driven investment company, so we don't buy meme coins. We tend to be skeptical of new projects. We dive into the technology. We try to understand, does this project need to exist? Who are its clients? Does it become indispensable or vital to their businesses? For Casper, those boxes have been checked for a really long time. And we also look at price. Price matters to us. There's a lot of crypto investors that will not spend much time looking at price. And we think that Casper might represent one of the absolute best values as far as a public blockchain with a 5-year legacy of compliance and uptime and diversified validators and business solutions becoming vital to business partners. And the price on Casper, we think, is very attractive. It's a function of it being hard to invest in, or nearly impossible, really, for U.S. investors because it wasn't listed on a major U.S. exchange. That changes this week. We're pretty excited. Is there anything, Michael, that you want to add to either your timeline, or we're going to get more announcements about this quantum wallet when it's available? Talk to us about
timeline. Stay tuned for the wire, as they call it, over the next days and weeks. There's a lot happening.
Well, I know that a lot of our clients that have been asking about Casper for years, people want to buy more than what we have in the fund because typically we run a diversified fund, max position size, typically 8%. They want to buy more Casper. So well, good luck, because we had to do an international verification in order to open an account to buy that, and most individuals can't get it done. But now everybody with a Kraken account is going to be able to pick up some Casper. It's like your TAM, your potential audience of buyers is now going to quadruple in one day, which is pretty cool.
Looking forward to it.
Yeah, us too. Well, I appreciate your time today. Is there any closing thoughts you want to leave us with?
No, I really appreciate you inviting me here as well, John. You guys have been invested in this project for a long time, and appreciate your support. And I want to thank the audience for tuning in, and looking forward to continuing the conversation in the future.
Well, we love projects with meat on the bone. Here in the United States, we say we use a rancher's analogy about cattle and the size of someone's hat. And a project like Casper is all cattle, no hat, meaning that they're not. We haven't noticed you guys hyping yourselves or marketing, instead just building quality products that have a ton of substance and meat on the bone. And we look forward to that being recognized by serious analysts that are looking for serious crypto projects. There's none that are more serious, or we think at a better low valuation than Casper 2.0 at this moment in time. So we'll be looking forward to tomorrow's listing on Kraken.
Thank you, John.
Thank you so much.